Bank of India today provided relief to the country's government and economy by cutting interest rates for the first time in 9 months. India's central bank cut benchmark interest rates by 25 basis points and also lowered banks' minimum cash deposit requirement to a nearly 40-year low, adding to the government's recent efforts to reverse the slowdown in the country's economy by releasing extra liquidity into the banking system. Many economists have expressed the view India's economy will show growth in the next few weeks. The economy has suffered a sharp fall in growth of more than 2%. The announcement today struck a cautious note on further easing as the bank waits to see how the government's upcoming budget aims to bring the country's problems under control, which include a record high current account deficit amid a large fiscal deficit, global risks affecting India through trade, finance and confidence channels, inflation due to supply constraints and high demand, banks being overcautious on lending due to the struggling economy, and doubts the Prime Minister can curb spending before the general election in 2014. Surgata Bhattacharya, an economist at Axis Bank Limited in Mumbai, explained the reasons behind the decision, saying, "Easing inflation and a better fiscal situation are creating space to cut rates. The central bank will be cautious in further easing due to concerns over elevated inflation, high current account and fiscal deficits." Almost all Asian currencies have been weak against the dollar in recent weeks due to heavy dollar buying by oil firms and other importers looking to meet end-of-month demands. The rupee had strengthened more than 1% against the US currency since Prime Minister Manmohan Singh began a policy to encourage foreign investment and speed up infrastructure projects in September. Since the rate cut, the Indian currency has gained 25 pace. Many analysts are hopeful this rate cut will encourage another in March. Shaki Satapathy, a fixed income strategist with AK Capital in Mumbai, said, "We expect another 25 basis point rate cut at March policy meeting. The quantitative fiscal management measures taken during the upcoming budget session would be the guiding factor in deciding the quantum and timing of future rate cuts in the next fiscal year." That's all from me, Natalie McDonald. Will be back tomorrow with another edition of Press Review. Take care.